Hello and welcome everyone to another weekly market commentary from StashAway. With us again, our Chief Investment Officer, Freddy Lim. Hey, Freddy. I see you got a new background there, so you must have moved within the home. So a little bit of new wall to look at.
I like my scenery before better, but I'm going for comfort in the study room. It's a lot more a lot less distracting doing a video conference in the room.
And it's good to move around so that it doesn't get too boring, because we have another 6 weeks to go, right? So at least. With that being said, yes, as everyone knows, there was news. We have another 6 weeks of basically working from home for everyone. So we hope at least once a week we'll be able to give you some joy, and you can listen to Freddy talk about the markets, and we'll take some of your questions. So as always, if you have any questions after this video, please feel free to put them down in the comment box below the video. Otherwise, Freddy and I want to get straight to it. Freddy, lots is happening as always, but primarily a few weeks ago already, oil was kind of going all over the place. Donald Trump said he made the art of the deal in oil, right? By getting Mr. Putin and Saudi Arabia to speak. However, for 2 days now, right, oil is dropping like crazy again. People didn't know that something can go down more than 100%. There is now negative prices on oil. Can you maybe tell people a little about what's going on there? Because I think for a lot of people that don't normally look at oil or like are not worried so much, they see it all over the news now and maybe not understanding what's going on.
If I step back a bit, in Q1, especially February and March, we have an oil price war, right? That was the fundamentals of the oil market driving the drop in oil, and it's a oversupply situation and all that. Politics got in the way where Russia, Saudi Arabia underestimated the extent of the impact of COVID-19, and we had a situation where close to 15 million barrels a day are being oversupplied a day. And the truth that came was a bit too late. We cut about 9.7 million barrels a day, right? So that was the situation before Mayor. What I meant was there are traders stuck with long positions. In fact, there was an ETF that's said to be at one point 25% of the open interest in the May contract for oil, and they are long. And they have to take delivery of the oil. They don't close out that contract on last trade date. Last trade date was 21st April. Yes, that was yesterday. So into the last trade date, you get a flurry of activities. People desperately trying to close the oil contracts because they don't want to be the one taking delivery of the physical oil. And that's because we ran out of storage places on Earth.
I saw Indonesia trying to hire tankers to keep it even offshore, right? Just because they want to buy right now and store it somewhere, right?
Yes, but that wasn't enough versus the global supply situation. And so apparently people were so desperate to get out of the physical delivery that they will pay you $37 a barrel or 3.7 cents a liter, pay you to take the oil away from them. That was how bad it was. It also surprised me that there was no circuit breaker in the oil futures markets. There was no zero limit boundary for a futures contract in oil. That really surprised me for the first time ever. But again, it is a logistical nightmare-driven impact on the market. I'm happy to say that the stock market didn't react as much as before in Q1. Maybe it's simply because oil was bigger than before. We had this big drop in Q1, and oil sector, in terms of its share of market value in the S&P 500, for example, has gone down dramatically. So its impact is also now a lot reduced, right? And so we did see a 4 percentage point pick to the recent pick to today, about 4 percentage point drop in the market. But this is nothing compared to the 25% to 30% impact back in Q1.
Yeah, I think that's good to hear for everyone, right? What impact does it have really on diversified portfolios? It's probably a lot less than when you just look at the oil market by itself. Well, thanks, Freddy, for answering all of these. We did get quite a few questions, so let's see how many we can get through. Let's go to the first one. Leon Ho, thank you for your question, first of all. He was asking, hey, I would like to ask, is it beneficial or better if I were to create multiple portfolios of different risk levels? Well, let's say if I create a 6%, 22, and 36, or is it sticking to one portfolio risk point better? What is your suggestion there, Freddy?
Well, if you, in a simplistic manner, if you create 3 portfolios of equal size, you are ending up with an average of somewhere in the middle, right? So it's still one portfolio. Yeah. The thing is that you should set multiple portfolios only when you have multiple life goals to invest towards. So if you want to have a retirement goal 30 years from now, that's one portfolio, right? It could be relatively higher risk than another goal that you have, which is to put a down payment for a flat in a year's time. The time to go, the goal time, is what determines the relative risk for the same person. So with more time, more room for compounding, more room to absorb short-term losses, then recover and go beyond, right? So again, I would suggest taking an approach where it's indexed and benchmark against your life goals.
Yes, totally agree on that one. Just gave a seminar about this. But yeah, thanks, Freddy. We have another one from...
That was last night, right?
Yeah, exactly. We get another question from Wong Chi Moon. He said, hey, StashAway team, when I deposit my money on StashAway, will I get to ride on the price as of that day, or will it only be deposited and counted a few days later? The reason why I'm asking is because sometimes there's an opportunity to ride on a dip.
Okay, how it works is this. When your money, if you're 90% of the time, if your money comes in around midday, 90% of the time, in most cases, in rare cases it doesn't, but in most cases, it goes to get invested tonight when New York wakes up. So you don't lose any time, because in Asian time, right, US is sleeping. And so when you are investing your dollar, you're putting a deposit today, and around midday, 90+% of the time, the money gets deployed in that night when New York wakes up. So you don't miss out on timing. So yes, you will be able to be very close to the market conditions that you are targeting.
Yeah.
That's for the inflow. On the deposit, on the withdrawal, there's some extra bank-to-bank delays, right? But it's just that's a different story. But the sell order also would be executed on the same day. So in terms of market trade, it will be very instant, but in terms of deposit and withdrawal, bank-to-bank transfer, that's a separate matter.
Yeah, exactly. It's when we receive the funds, right? So and nowadays you can also transfer from your StashAway Simple account directly into the portfolios on the risk side, on the global side as well, if you want to make use of that. Thanks, Freddy. Let's go. We have a little bit of time left, so I think let's go to David Chang's question. He says, hey team, since the US is doing QE to infinity, how would that affect our portfolio since they're mostly denominated in US dollars? What would happen if one day major economic heavyweights decide to drop the US dollar as a reserve currency?
Well, look, I think it's a phase question. Whenever there's a market meltdown or systemic risk that's abundant, the reserve currency is still the US dollars. It cannot be unwound overnight, right? And so ends up, it outperforms every single currencies in the world. Just to pin a number down for you, even against the Japanese yen, which is viewed as a safe haven currency, the dollar went up. Against the Swiss franc was the same. So funding currency is a very key status. Reserve currency is a very key status. Activities for funding and for reserve currencies, right? So that's not going to change, but with time it may, but we're not in a situation there. Now, when it comes to QE, I think the users concerned about dilution of purchasing power of paper money, in this case, the US dollars. But again, you got to view it as a percentage of GDP that's being pumped in the US versus the other country. So for example, let's take dollar versus Sing dollars. Singapore has pumped 11% of GDP, slightly more now given yesterday's announcement. Yeah, so let's say it's 12% of GDP. The US has done something that's also similar in the ballpark of around 10, 11%. So, but the GDP size of the US is way bigger, so the numbers looks more staggering. But as a percentage of its own size, is similar. So that's why the dollar Sing did not drop, right? Actually, dollar Sing was still trading in the range that's generally higher than before, right? But at some point, if the quantitative easing meant, it is likely that the US dollar will then start losing its value again, as in any recovery. And that's the phase where you would then want to re-optimize portfolio and start reducing exposure to US dollars. So just to clarify, StashAway's portfolio are not exposed to US dollar 100%. They're exposed, depend on the portfolio, they're all varying percentages, but our trading currency, our denomination is US dollar because the deepest, most liquid ETFs trading on the UX exchanges. It's just to facilitate transaction, but the underlying exposure is super global. We're exposed to all sorts of currencies in the world. US dollar has the largest component, but the component is not 100%. It's sometimes for a high risk portfolio, it could be a lot more. For a low risk portfolio, it could be as little as 15%. So it varies by the portfolio that you have selected.
Yeah, thanks, Freddy, for that explanation. I think we do get that quite a lot. So, and thanks, David, for your question. Again, thank you for everyone asking questions. So please feel free to keep asking them. We'll definitely get to them. Either Freddy and I will be answering them here live, or we have one of our client engagement executives answer them under the video as well. So keep asking them. We want more engagement. We want to be there for you guys, especially during times like this. With that being said, we also have a couple upcoming webinars in both Singapore as well as in Malaysia. In Singapore, we have an event called Investing for Women. That is going to be on the 28th of April at 7 p.m. It's a webinar. So you can sign up for this by clicking one of the links below the video, or you can also go to our Academy page, which you can reach through our website or Eventbrite or anywhere else you can find us. In Malaysia, we have an event on the 29th of April, a webinar. It's called How to Plan for Your Retirement. So you learn some great retirement strategies there from our Malaysia team. You can, again, sign up clicking the link below, or where else you can find us on our Malaysia website and Facebook page. With that being said, Freddy, thank you again for being here. I hope to see you in person soon. But otherwise, I think we'll be with everyone again, fresh, hopefully maybe from a different room next week. Otherwise, everyone, have a wonderful rest of your week. Bye-bye.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.